A nation's wager, the high stakes of artificial intelligence. The United States is placing a monumental bet. It is a wager on a future powered by artificial intelligence, across the nation, from the boardrooms of Silicon Valley to the halls of Washington, D.C. Leaders, corporations, investors are pouring unprecedented sums into AI development and deployment. This technology is no longer a distant dream from science fiction. It is now a primary force shaping the trajectory of the American economy. This shift is happening with incredible speed, and its consequences will touch every citizen. It will influence our jobs, our wages, the very fabric of our daily lives. The core question is stark and unavoidable. Is this a reckless gamble on a speculative bubble, or can AI deliver sustained, widespread prosperity for all? This is not theoretical. The stakes are real, and here today. The future growth of the U.S. economy is now linked to the performance of complex digital systems. When major companies report quarterly earnings, AI investments are headline items. The federal government is allocating billions for AI research and for semiconductor manufacturing, framing it as national security and economic destiny. The new engine room: how AI drives economic growth. How exactly does artificial intelligence fuel productivity and economic growth? The mechanism is about doing more with less, and doing things that were never possible before. AI automates repetitive tasks, analyzes vast amounts of data to find hidden patterns, and makes more accurate predictions. This leads to greater efficiency that, replicated across thousands of firms, adds up to measurable growth in GDP. A large retailer uses AI to synthesize sales data, weather forecasts, social media trends, and local events to order the right stock. Less waste, fewer empty shelves. Efficiency translates into higher profits and a stronger business. In healthcare, AI scans images like X-rays and MRIs to spot disease earlier, improving outcomes and saving clinicians time. On assembly lines, AI-powered robots boost speed and quality beyond human endurance. In finance, AI parses markets in milliseconds and screens credit applications quickly and consistently. Even creatives leverage AI to ideate faster and produce stunning effects more affordably. Economists call AI the next general-purpose technology, like the steam engine or electricity. Its broad impact is reflected in rising valuations of AI leaders. Investors are betting these gains mark a long expansion driven by intelligent machines. Each application compounds, propelling a more productive, dynamic economy. The flow of capital, where the AI money goes. Massive investments come from three primary sources: established technology giants, venture capital backing startups, and the U.S. government. Big tech invests tens of billions, builds colossal data centers, hires top AI talent, and develops foundational models. Immense resources confer a significant head start. Startups target niches, a legal research accelerator here, precision agriculture there. Investment concentrates talent into hubs that speed innovation. Government funds fundamental research for competitiveness and national security. The CHIPS and Science Act boosts domestic fabs, securing the hardware base and reducing foreign reliance. Capital flows into power, cooling, and the real estate behind AI. Specialized chips become hot assets. Valuations soar across the stack. From research to infrastructure, America is committing deeply to an AI-driven future. The human equation: jobs gained, jobs lost, jobs changed. No topic triggers more anxiety. It's a complex mix of creation, transformation, and elimination. Routine, predictable tasks, data entry, customer service, quality inspection, face high automation risk. Workers in these roles may face displacement and need new employment paths. Yet AI also creates jobs. AI specialists, ML engineers, data scientists, prompt engineers, and AI auditors, roles demanding new skills and retraining. The biggest shift is augmentation. AI handles the tedious parts, freeing humans for strategy and creativity. Creativity, critical thinking, complex problem solving, amplified. But a skills gap can widen, especially for mid-career workers, without time or resources to retrain. New jobs cluster in hubs, leaving some communities behind. Addressing the human equation matters as much as advancing the tech. This discussion touches technologists and economists, and also factory workers, small business owners, and students choosing skills. It matters to citizens focused on fairness, privacy, and social stability. The great American AI gamble is underway. Passive observation is over. Active participation begins now. Experts range from optimists who see unprecedented productivity to realists warning of inequality. Like past revolutions, AI may create more jobs than it destroys, and raise living standards. Economist Darren Acemoglu argues outcomes depend on choices, prioritize augmentation over pure labor replacement. Researchers like Fei Li advocate human-centered AI, designed for values, ethics, and safety. Concerns include algorithmic bias, misinformation, and loss of human autonomy. Some warn about superintelligence and spur a growing AI safety research movement. Beyond growth, risks loom, dramatically widening inequality and concentrated gains. Cutting-edge AI demands data, compute, and talent. Few firms possess all three at scale. Dominant platforms can gatekeep innovation, reduce choice, raise prices, and slow long-run progress. Dual-use risks span deepfakes, disinformation, malware, and attacks on critical infrastructure. If trained on biased data, AI can amplify inequities in hiring, credit, and justice. Without auditing, transparency, and regulation, systems may legitimize unfairness and erode public trust. Given immense potential and real risks, leaving AI solely to the market would be a mistake. We need proactive policy, guardrails that mitigate harms while fostering innovation, prioritize education and workforce training, updated curricula, digital literacy, critical thinking, short courses, apprenticeships, lifelong learning, establish safety rules, require transparency and explanations, and set clear liability for harms, mandate bias testing before deployment in high-stakes domains. Promote competition, scrutinize mergers, lower barriers, share datasets, compute, and require interoperability. Strengthen support so workers can transition with dignity and confidence. Companies should favor augmentation and invest in reskilling and upskilling. Common benchmarks build a transparent, trustworthy market and filter out unsafe systems. Go beyond compliance, institutionalize ethics, accountability, and openness. Long-term success belongs to useful, reliable, trustworthy products that solve real problems. Broadly distributing gains stabilizes society and strengthens markets for everyone. Is America's bet a new golden age, or a bubble? The answer isn't preordained, it is a choice. Make the bet a smart one. Invest in people, set clear, sensible guardrails, keep markets open and competitive. Safety and progress, two sides of the same coin.